Hi folks, in this video, we're going to talk about customer deposits or customer prepayments in QuickBooks Online. Now the context behind this is that you're going to get paid from your customer. You're going to receive money from your customer prior to you delivering the product or performing the service. Therefore, this payment is technically not a payment for the product or service. It's a prepayment or a deposit towards the future delivery of product or the future performance of services. Now, this is going to have special accounting treatment because of a rule called revenue recognition. This is an accounting rule that says you must or you should only recognize the sale. You should only recognize the revenue when you effectively have delivered the product or performed the service. Just because you tell the client to pay you and they actually pay you, or you invoice them, it doesn't mean that you get to recognize that sale. And the reason for that is because most sales in which the customer makes a prepayment, if you don't deliver that product or service, you probably have to pay them back. And because of that, it's not really a complete sale. So the idea is that in QuickBooks, we're going to have one method to bring the money in, and there's going to be two options to book that. And when we actually perform the service or deliver the product, then we're going to take the payment and apply it towards that invoice in the future. So I mentioned two methods, and we're going to go into QuickBooks Online and we're going to cover each of the methods. Let's start with the first method, which I call the negative accounts receivable method. And in this method, we're going to receive a payment prior to creating an invoice. And then after the invoice is created, we're going to apply that payment. So let's do an example. Let's say I'm selling the customer a $10,000 service from which they have to pay me, let's say in August, 30%, but we're going to perform the service in September. And then in September, we're going to recognize the entire sale, apply the 30%, and then receive the remaining amount of $7,000 in the future. So let's do that example. Let's say first we're going to receive the money. So we're going to click on the new menu on the top right, and then we're going to click on receive payment. Again, this is the negative accounts receivable method. We're going to select our customer. Let's say this customer is called Roberts Development, and we're going to simply receive a payment. You're going to notice that there are no open invoices in here. And even if there were open invoices, you must make sure that you don't click on them because this is a prepayment or a deposit in which we don't want to apply to a payment yet. So I'm going to go ahead and select, let's say, the date that the customer paid us. Let's say that's August 1st. We're going to perform the service, let's say in September, but we're going to receive $3,000 off that $10,000. So I'll just put here that they paid us with a check number 1234, and then we'll put here $3,000. Now you could put in the memo something that would make sense to you. You can put something like 30%, down payment for September service. Something that just makes sense to you, something that you know or recognize later on. And that's it. We receive the payment and that's it. Now, the challenge with this method, and probably the reason why a lot of people don't like this method, is because I can't give the customer a document. I can't give them a paper that says, hey, you have to pay me. I guess you can email them. You can tell them verbally. You can open up a Word file, create your own payment request or down payment request. You could create an invoice, an estimate, and specify in the estimate that they have to pay you 30% to get started, something like that. But there isn't sort of a one-to-one document that matches the payment with the actual money from the payment with the action of requesting the customer the money. So this is just a payment that's not being applied to. I'm receiving a payment like normal. I can send it to undeposited funds or send it straight to the bank account, whatever method you use to deposit that payment. So anyway, so we got $3,000 in there. I'm going to go ahead and click on save and close. And then it tells you here, warning, I don't have any invoices to apply. You're going to have a credit for your customer that could be used in the future. So I'm just going to click on save as credit. And that's what it means. It's a negative accounts receivable. Now, what does negative accounts receivable mean? Well, I'm going to go into my balance sheet. So I'm going to go into reports, and then I'm going to scroll down and click on balance sheet. And I should see a negative $3,000 into my accounts receivable, right? So it's a negative accounts receivable method. Now the $3,000 are sitting here in undeposited funds because I didn't deposit it to the bank yet. Let's say we're going to go ahead and do that deposit. And this deposit has to do with depositing in the bank. The second part has nothing to do with the deposit we get from the customer. That received payment was essentially the deposit. Now we have to make the action of depositing the money into a bank account. So I'm going to click here on bank deposit and then follow the process. Let me just create a bank account. This is a brand new blank QuickBooks file. We'll call this BOA 1122, which started with $0. And I'm going to go ahead and deposit this $3,000 here into the bank. And here's a memo that we wrote earlier. Beautiful thing. We'll click on save and close. So now, I'll actually have to click on this little checkbox here to make sure that we select that payment to be deposited. Then I click on save and close. So that we made the deposit. Now the money is sitting in our bank the way it's supposed to. And then we have a negative accounts receivable of $3,000. That means that we owe someone $3,000. A negative accounts receivable is a liability. Then step 2, we're going to deliver the product or perform the service. So we're going to click on new and then let's go to invoice. Now we're going to recognize, officially we're going to recognize the sale when we actually perform the service. Let's say on September 1st, we perform the service. I select my customer here, Roberts Development. I'll select a product here. Let's say this is hours. And then let's say this was 10 hours at $100 per hour, or let's say 100 hours at $100 per hour. That gives us to 10,000. Notice that nowhere here I'm going to put that they already paid me 3,000. This is the invoice is sort of by itself. And this is how you recognize your sale or your revenue. And it's independent from the payment. So I'm just going to click on save or save and close. And then it says, hey, we automatically applied the existing credit. So it did it for you automatically. I can show you how you can unapply that if you need to, or where you can turn off the option for this to apply things automatically. Don't remember if that's an option you can change. We'll look into that. Then I'm going to click on OK. And now this has been fully applied to. So now we go back into our balance sheet. This balance sheet is for August. It doesn't contain the September date. I'm going to push this up to, let's say, September 1st, which is when I created that invoice. Click on Run Report. And now we're going to have a different number here. We have now an accounts receivable of $7,000. That's the amount that my customer owes me. They owe me $7,000, which is the balance between the $3,000 I paid for and the $10,000 invoice. Now I'm going to click here on the recent transactions button or the search button, and then I'm going to go ahead and open up that invoice so we can go back and see that invoice. And now you notice on the right hand side that it says one payment has been made. That was the payment that was automatically applied to the invoice. Again, this is a problem sometimes because if you have multiple invoices, QuickBooks is not going to know which payment to apply to each invoice. This is why we need to look at the second method potentially, which we'll do at the end of sort of when we finish explaining this part. So I'm going to click here. It says one payment made. So we can see the history of payments. I can click on the date so for it to open up the payment. And now you can see that this payment for $3,000, which previously had nothing here where it said outstanding transactions, it was blank. Now you can see it applied. So once that payment is applied, that's when you tell in QuickBooks that payment belongs to that invoice. If there was 3, 4, 5 invoices, you have to manually uncheck it here and select it and apply it to the correct invoice. Okay, so you can actually always go back to the invoice and apply that. Now I'm going to click on save and close. And now let's see the financial consequences or the financial elements of doing this. So I'm going to run a different report. I'm going to run my profit and loss report. I'm going to click here on profit and loss. And I'm going to run my report in accrual basis. And I'm going to run it for the month of August. Okay, so I'm going to click on run report. And there's nothing in my profit and loss. No sales, no expenses, no nothing. Because I didn't create the invoice in August. I created the invoice in September. Now I'm going to switch this to cash basis. And then click on run report. And now you see that $3,000 are being applied in sort of retroactively, going back in time and applying the $3,000 in August because it was applied to an invoice, but the invoice is in September. The reason why this worked like that is because I clicked on cash basis. And in QuickBooks Online, when you click on cash basis, you'll recognize the sale based on when you got paid, not necessarily when the invoice was created. if I click on accrual and click on run report, it only gets recognized in the month it was created. So let's go ahead and show August and September together next to each other. So I'll show August and September, and then where it says columns, I'm gonna put here months. That way we can kind of see the 2 months together. Click on run report. So in accrual basis, where it recognizes based on the date of the transaction, notice that nothing is recognized in August and $10,000 get recognized in September. Now let's say that this customer paid us the balance in October. So let me expand this one more through October. So I'm gonna go through October 31st, click on run. Now we see the 3 months here put together. We're still in accrual basis. I'm gonna go ahead and receive the balance of the $7,000 in October. So I'm gonna click on new. I'm going to click on receive payment. So this is after the invoice has been created. I'll select the customer here, and then they're gonna pay us the balance, which is $7,000. But just to mess with you a little bit, let's say the customer didn't pay us $7,000. They paid us, let's say, $27,000. It was $7,000 to apply to this invoice and $20,000 to apply to an invoice in the future, let's say for November. So I'm gonna put here $27,000. And now notice that it automatically applied it to the only invoice that was there for $7,000. If I want to manually change the application, I can put the $7,000 in there, and notice that it says amount to credit $20,000. That's basically telling me that $20,000 are left to be applied in the future. Now let's say this payment was received in October 1st, and then we're going to click on, and let's put it straight into the bank. I'll skip on deposited funds so I don't have to do one more step, and then click on save and close. And now we're going to see, when we go back to our profit and loss, let's go back and do 08/01/2021 through 10/31/2021, and then do columns by months and click on run report. And then what did you see? You see nothing on August because I didn't invoice in August. You see nothing in October because I didn't invoice in October. And you only see the invoice in September because that's the only time I created an invoice. This is accrual basis, again, based on the transaction's date. If I switch this to cash basis, I'm going to click on run report. But before I do it, what are you expecting to see here? Okay. Some of you might, before I hit run report, some of you might say, well, I'm expecting to see $3,000 in August and then $27,000 in October and nothing for September. Let's see. Let's click on run report so we can see what it is. And then basically what's happening here is QuickBooks is actually recognizing the $3,000 in August because that's when you receive the money. Then it's recognizing it in September again because that's actually when you actually created the invoice. But then it reversed it because you already had previously recognized it in August. So essentially, you recognize nothing in cash basis and nets to zero because there was no payments, no money movement in September. Remember, cash basis follows the cash. So you got cash or you got paid in August, so that's $3,000 being recognized, and then you got $27,000 being recognized in October of 2021. So that gives you an idea kind of what's going on there. Now, I do want to add a couple more things to this just because this stuff becomes a little bit confusing. This account called unapplied cash payment income, you actually cannot use that account. You can't manually go in there and put things in there. That's a very special account that QuickBooks uses specifically to apply payments that have invoices in the future or payments that have no invoices attached to them. So for example, here in October, there's no payments attached to that $20,000. Therefore, it puts it there in unapplied cash payment. If I were to create an invoice in November and then apply it, you're going to see that same sort of weird reversal effect. So let's say, we have the $20,000 in credit. Let's say I want to create 2 invoices and I want to choose where to apply that money. So how would that work? I'm going to click on new. I'm going to create invoice. And let's say I have an invoice for the same customer. I have an invoice, let's say for $25,000. We'll just put it here. So $25,000. And of course, QuickBooks is going to apply the whole $20,000 to it, but maybe that's not what I want. I'm going to click on save. It did it automatically. We talked about it earlier. We didn't have a choice. It just did it for you automatically. I didn't want to apply the whole $20,000 to it, but it just did it for you. That's fine. We're going to go back and deal with that in a second. I'm going to create another invoice, let's say for $3,000. And let's select the same customer here. And let's say this is for a different product or service. And I should essentially apply, or I want to apply some of the 20,000 to this one. And I want to kind of pick and choose how to apply those 20,000. I'm going to put this in, let's put this one, let's put the 3,000 in December. And then I'm going to go back for a minute and let's look for the 25,000 and put the 25,000 in November. That way we, based on the month, we can recognize all these invoices. Then I'm going to click save, click yes. And then it's just telling you again that it was automatically applied, the original 20,000. I'll close that. I'm going to again do 08/01/21 through December 31st, 21. We'll display columns by month and click on run report. And we get the entire gamut of what's going on here. So in accrual basis, we get 10,000 in September. That's the invoice date. We get 25,000 in November. That's the invoice date. We get $3,000 in December. Those are the invoice dates, not tied to payments. If I click on cash here, click on run report, you're going to see now the revenue recognition when in cash basis is based on what you got the money. So you got 3,000 in August, 27,000 in October. It's recognizing $30,000 in sales based on the months that you received the money. If I switch back to accrual and click on run, I see $38,000 in sales because there's an additional $8,000 that have not been paid for. And in accrual basis, you recognize things even if you have not gotten paid for. Now let's change the way those $20,000 were applied by, I'm going to click here on the magnifying glass and then go back into this $27,000 payment. And you're going to notice that, again, because QuickBooks did it this way, there's a $7,000 originally applied, and then there's $20,000 that was automatically applied. Let's say that out of those $20,000, I want to apply the full payment to the $3,000 and then the balance to this $25,000 invoice. So I'm going to reduce this by $3,000, and then I'm going to click on the next invoice down and apply the other $3,000. That's how I can get to pick and choose how to apply to those invoices. I'm going to click save and close. And essentially, you're going to see, let's just do it again, 08/01/21, 12/31/21. Do it by month. Click on run report. Accrual is going to be the same because we haven't touched the invoices. And cash, presumably, should also be the same. You're just going to see sort of different movement, the payments are correcting themselves and that sort of thing because they started reporting in unapplied cash payments because of the cash basis method. So this gives you a very clear understanding of method one, how you can receive the payment prior, create the invoices later, and then pick and choose how to apply them. Now let's go into the settings real quick. I actually don't remember, believe it or not. I'm going to click on the gear menu. I don't remember if there is a setting that allows me to opt out of the automatic application of payments. Now this would be under sales generally. And then let's see down here, there's nothing here that allows me to turn off or on application of payments. That's strange. Let me go into advanced, see if maybe there's something here. And no, it looks like just there isn't. There's no way for me to, oh, actually there is automation right here. Whoops, there it is. So I'm going to open that and then it says automatically apply credits. I think that was what was doing that automatically. So I'm going to turn that off. So sometimes remember, it's hard to remember all the things that QuickBooks can and can't do, but I wasn't 100% sure that wasn't there. But I'm pretty certain that's the one. Let me click on this little thing and it says, yep, automatically apply to the next invoice. I'm going to click on save, click on done. If you remember correctly, there is an open invoice. I think there's still an open invoice in there. Let's go into customers. So let's go into our sales here under invoicing and customers. And we should have a customer with an open balance. There he is, Roberts Development. So let's receive a payment for Roberts Development. I'm going to click on new, click on receive payment. I'm going to pick Roberts Development. And let's say I'm going to receive $4,000. Now, this automatically applied to that. That's interesting. Even though we unchecked that or we turned that on, it automatically did that. That's weird. Let me go back into the settings again to make sure I didn't miss something in the process. It's possible that I did. Here under advanced automation. No, I turned that on. All right, so let's do a little bit different just so we can kind of explore how that works. Let me go to new, receive payment again. Let me select the customer, and let me select 8,000. Yep, it automatically applied. I don't think even though it said that, I don't think there's a way to actually stop it from automatically applying. So if you do want to not apply it, you manually are going to have to unapply it. But let me do it this other way. Let me do $15,000. That's automatically applied. There's the $7,000. What I'm going to do is I'm going to create another invoice from this payment, and let me see if it actually applies that automatically as well. Let me click on save and close so we can figure out whether or not that feature is actually worth anything. So, or that setting that's supposed to do one thing. So let's go to new and let's go into invoice, and I'll create an invoice for, let's say, January of the following year. And I'll just pick an item here, and let's make this, I don't know, $9,500. Okay, there it is. Let me select the customer. And now what I'm thinking or hoping when I click on save, that it doesn't apply automatically that payment. Maybe that's what that setting's for. We'll click on save, and look, it didn't say that it did it automatically. So it didn't apply it automatically. The invoice is still showing there. So that setting doesn't stop QuickBooks from applying it in the payment screen. It only stops it from applying it in this specific screen. Let me X out of that, and let's go back and look at that $9,500, no, actually $15,000 payment. Let's look at that, and effectively the original $8,000 is still applied, and then the balance of $7,000 is not applied yet. Then I can go back and manually type the $7,000 here and apply it later, or apply less, whatever I want. Save and close. Okay, so now you know exactly how the entire process works with the negative accounts receivable method. You know how the automatic application of payments work. You see where it's not working and where it is working, so keep that in mind. Okay, now we're going to do method number 2, which is called the current liability method. And essentially with this method, we're going to create a current liability account called customer deposits. And instead of having that negative AR that we talked about at the beginning, we're going to have a positive liability or a positive payable. That way, and again, it's the same thing, but in the balance sheet, it looks like money that we owe, not negative money owed to us. And it's just done mechanically, it's just cleaner in our financial statements. It will take an extra step to do this and a couple of additional sort of reporting techniques, but this is what most accountants deem as the correct way of doing it. So let's start with receiving a payment. And the trick behind this is we're not just going to go to new and receive payment. We're not going to start that. We're actually going to invoice the customer first. But generally, whenever you use this method, there is an estimate prior to that kind of sort of predicts what's going to happen in the future. So let me start doing an estimate first. So I'm going to click on estimate, and then let's say this is going to be $100 project, $100,000 project that's going to be paid for over time. So I'm going to create the estimate of what the entire thing looks like, and then I'm going to invoice them in pieces. So I'm going to select a new customer. Let me create a new one, and we'll call him ABC customer. Then we click on save. And let's say that this estimate is being done January 1st of 2022. I'm okay with that. And we'll pick the item here, and let's just make this $100,000 over time. That's the entire project, $100,000 over time. And we'll put in the description how we expect to get paid. So let's say we're gonna get paid $25K in February, $50K in March, and then 25, let's just make it different numbers. So 40K in March, and then that would be 35,000 for the balance, right? So 35,000 in April. Okay, so this is, let's just call it payment schedule. Okay, so that's payment schedule, and payment schedule might be different than the way we recognize the revenue. We talked about revenue recognition. This is how we're going to get paid, which might be different than how we recognize the revenue. Let's say we recognize the revenue as we complete the work. Let's just say that. So in order to just kind of make it easier here, I'm going to put 100 for quantity, and then 10,000 for rate, or 1,000 for rate. That way we get the same 100,000, but it's just sort of a little bit easier visually to read. So this is this is the payment schedule, not necessarily how we are gonna perform the work. So we discuss that in a second. So I'm gonna go ahead and click on save, and that's done. The estimate is done. So now I can send my customer this via email so they know exactly what we're expecting. We probably don't even need to send our customers invoices because they have a payment schedule. So we're going to use the payment schedule to collect from them. We don't have to give them an invoice, but you could, and I'll show you that in a second. So let's say this project's actually going to start physically. It's going to start being done in March, but we're going to start getting paid in February. We're going to get a prepayment or a deposit in February. So the way we're going to do this, so we can give the client a document, or especially if you want to give the client a document for them to pay you, is first we have to create a product or a service for that prepayment because that's going to go inside of an invoice. So let's go into invoicing or sales, depending on what your screen looks like. And let's go to products and services. And then we are going to click here on new. And we're going to create a new item, a service item or non-inventory, either one. I find service to be a little cleaner. And we call this customer deposit. You can call it customer prepayment. You can call this project payment schedule or project scheduled payment. That would make a lot more sense. So we'll do product schedule payment, and that could just simply be a deposit and then the final payment afterwards. I'm making it a little bit more complicated than it normally is, but that's how we're going to do it. Then under income account, and this has nothing to do with income, we're going to create a customer deposits liability account. So I'm just going to type customer deposits liability, and we're basically creating an account that's going to be a current liability account. So the account type here is going to be current liability. It's called current deposits, or customer deposits liability. Here in detail type, it doesn't really matter what you put in here. If you really wanted to make this sort of as close as it's supposed to be, you can use just other current liability or not prepaid expenses payable or something like rents in trust. That's kind of what makes the most sense. But I'll just do other current liabilities and click on save and close. So the item is going to point to the balance sheet into liabilities, and I can use the item in an invoice. So I'm going to click on save and close. Now the item is created. Now I can use an invoice to actually tell my client to pay me. So I'm going to go to new. I'm going to click on invoice. Okay. I'm going to go into customer here. Let's say customer ABC. There is an estimate here that I could bring, but I'm not going to bring the estimate because I'm not recognizing any revenue. I'm just requesting my customer to pay me. So I'm going to select the date here. Let's do February 1st. Under product and service, we'll put customer deposit. In description, okay, perfect, project scheduled payment. We can call it number 1, so we know. And then under quantity, I can just put 0.25 and the rate of 100,000, just so it's like sort of clear to the customer that they're paying 25%. I can also put here 25% down payment to start, or whatever additional information you want to give. So now I can click on save. I can actually email my customer this invoice. They can pay me through the electronic method of being paid. We'll receive the payment. We'll accept that payment, all that stuff. Let's go to receive payment, and let's receive the payment. Let's say on that same February, let's say they paid us immediately, and then we click on save and close. So we have a payment received. Let's go into my profit and loss report. So let's go into profit and loss, and let's do 01/01/2022 and through, let's say, April 30th, 2022. And then under columns, we're going to put months, and then I'm going to click on run report. And there's my profit and loss. What's that $9,500? That's not related to what we were doing just now. That's the other $9,500 invoice that we just did. We did get paid $25,000 just now, but it's not showing up in my profit and loss. It's not even showing up in cash basis because that $25,000 really has nothing to do with being paid on an invoice. It has to do with it being a deposit prior to us doing the invoice. So whether it's cash or accrual, it's completely unaffected. The $25,000 are going to be, actually, let me delete these $9,500 out of here just completely, just so we can avoid some confusion here. and then we'll go back into our profit and loss report and go back into that. And then that was by month, correct, run report. So we got absolutely nothing. Again, there's no revenue being recognized because that stuff is going in the balance sheet. So let's go into reports. I'm going to go ahead and open up the reports menu in another tab. And now we're going to open the balance sheet because I want you to see where the $25,000 is. So we're going to go there into the balance sheet, and the $25,000 should be, it was February. So to February 1st, 2022, okay, because the date range needs to match. Click on run report. And now I should have a customer deposit liability of $25,000. That's not income, at least not yet. It will be income when we apply it to an invoice, okay? All right, that being said. So let's say in February, we did 10% of the work, okay? Even though in March, we did 10% of the work. We got paid 25% of the payment because that was the payment schedule, but we only did 10% of the work. So I only want to recognize 10% of that invoice. So then what I would do is I would just go to new estimate, and I'm just going to recall my old estimate. So I'm going to click on this little recent transactions button. I'm going to recall my old estimate, and I'm going to create an invoice for 10% of this estimate in March when we did 10% of the work. So I'm going to click on create invoice, and then I have a choice to do the whole thing or to do a percentage. Okay, that's what happens when you create an estimate, an invoice from an estimate. It will ask you if you want to do what's called progress invoicing, and this is a perfect scenario to do that. So we're going to select that and then click on 10%. Okay, so 10% of the line. Then I'm going to click on create invoice, and then we will invoice this in March because that's when we did the work. So let's say I was at the end of March, so 3/31/2022, and I'm going to click on save. Now, remember that we turned off the feature that QuickBooks will automatically apply payments to the invoice. So the payment has not been applied yet. If I click on receive payment, it will take me to the receive payment screen, and now I can manually apply part of those $25,000 to this invoice. Prior to doing that, let me go back into the profit and loss and click on run report just so we understand what is going on here. I recognize $10,000 of the invoice because that's the revenue that I recognize. That's how much work I have done. If I switch over to cash basis, this is going to go completely blank. The $25,000 will not be recognized, again, because we're using a different method that send it to the balance sheet. That way I'm never going to get that weird unapplied cash payment income in there. That's why most accountants like the second method better, because it keeps the profit and loss clean. I'm going to go back and click on run report, and then there's the 10,000. Again, it's an accrual. I'm going to go back into cash, click on run report. Nothing is showing. Okay. So now, in order for us to effectively apply part of those $25,000 into that invoice, we actually first need to run a report that let us know whose money we have and whether or not we have any money from that customer in our liability account. So I'm going to go into my balance sheet here, and let's date this for 2022, so it includes that. There's my $25,000. I can click on the $25,000, and I can click here. It says group by, and I'm going to group that by customer and click on run report. That way I will know that out of that money, ABC customer has $25,000. But let's say, just so we can complicate this a little bit, let's say that during that month, we reset, let's say, 2 other prepayments, right? That way we have a little bit more information in here, and it's not showing just one customer. So I'm going to go to new, I'm going to go to invoice, and I'm going to select, let's say, this Robert's customer. And let's say that back in February, we got a customer deposit of, let's say, $21,000. And then I click on save. Again, a different transaction, a different thing altogether. Click on save and new. And let's say a couple of days later, we invoice a different customer. Let's say Steve, okay? And then we invoice Steve also a customer deposit, let's say of $9,000. And then we click on save and close. So let's say we got paid. Let's assume we got paid, and we'll skip that part. And let's go back into the balance sheet. And now we have $55,000 in customer deposits. Who does that money belong to? So I'm going to click on the $55,000, and then I'm going to click on group by customer, click on run report, and then I'll know exactly how much money is left for each customer. So that's a really important piece, is you got to be able to run this report, probably save customization. We can call it customer deposits by customer or whatever. Save it in there. That way we can recall the report later on, because we have to make sure that there's balance in there before we add or apply part of that money into that invoice. So ABC customer still has $25,000 in there. So I can just go back to that invoice. I'm going to go to new invoice, and then I'm going to click on the recent transactions button, pull my $10,000 invoice, pull it from there. And then this is a really tricky part. In order for me to apply that $10,000 to the $10,000 of the prepayment to this invoice, I have to add the customer deposits line as a negative amount. So I'm going to come in here and put negative $10,000. Now, usually your customer will not be getting this invoice just because it might be a little bit confusing to them. So this is more revenue recognition. This is how we internally recognize our sales. And let's say we want to apply that in March, right? That's the same the date that we recognizing the revenue. There's my $10,000. You could probably go back into your balance sheet report. Let me just do that real quick. And this is optional. You don't have to do it, but I can go back into my balance sheet report. Let's run our customer deposits again. And then let's group this by customer. And let's say this is the $25,000 that we got on February 1st. So if you want to, again, optional, you can actually add a note into here somewhere, anywhere. You can just put it maybe in the messaging or down here in the text somewhere, whatever you want to put it. I can come down here and put from 25,000. Sorry, let me do it again. Applied from 25K received in 02/01/2022. Again, you don't have to do that additional text. I'm doing it just to make it easier for me so I can see it in there. And then I'm going to click on save. Okay. Then I'm going to click on yes. So what that's going to do, I'm going to go back into that report and I'm going to click on run report. What that essentially going to do is now it's going to run a live tally of the funds that are available for that customers. ABC customer has $15,000 available in their prepayment account. And here's the very clear, right, when we actually got paid, which was February 1st. And then when we recognized part of that payment, which is March 31st. And then we put here in the notes. And again, that's really up to you how you want to add notes and memos to that. But that gives you a really sort of clear understanding of how that works. Now, let's say, for example, now in March, let's say we did 40% of the work. So we're going to create a, no, actually, let's make it more than that. Let's say in March, we did 70% of the work. Now, however, we still can invoice $40,000 because that was how we arranged the contract. So I'm going to send an invoice to request the $40,000, and then I'm going to create an invoice for internal purposes for us to recognize the additional 70%. Actually, the additional 60% because we've already done 10% of the work. So we're going to get up to 70. So let's go ahead and close that, and we click on save. So I'm going to go into new. I'm going to go to invoice, and now we're going to request invoice to get paid. So I'm going to go to ABC customer. I'm going to select here customer deposit. I'm going to put here payment number 2. Oh, sorry, scheduled payment number 2. This is going to be $40,000, and that was on April 1st, 2022. Notice that I'm not going to touch the invoice here because I'm not recognizing revenue. I'm simply just requesting to get paid. And it is possible that you can customize this form. You can edit it. So instead of saying invoice up here, it can say deposit request or payment request. If you want to make it a little bit less confusing to the client, that's up to you as well. But they recognize invoice, and through the memo and the description, you can explain all those moving parts. So we'll click on save and close. So we requested that additional money. I'm going to click on run, refresh the report. And now for this customer, I got $55,000 in the bag. That's how much money we owe the customer that we can apply to future invoices. That's $55,000. Now let's go ahead and create an invoice for the additional 60% for us to get to 70% completion of the job. Let's create an invoice. And again, we might not even send this to the customer. We don't need to. This is internal revenue recognition. We'll select that. Let's say this is going to be for end of April. I have it right here under estimate. So let's just delete that. And I'm going to click on add here. So this time around, I am going to select the estimate, not going to select a random item in there. I want to bring that in there again, because I want to do the percentage. So I'm going to do 60% this time. So I can bring it up to 70. Click on copy to invoice. This is now going to bring this in here. Oh, hours was the item that I had used. Okay, I remember now. Okay, so there's that in there. So there's 60,000. And now I can apply the money from my customer deposits account. Now, in my customer deposits account, I only have 55,000. If I actually make the mistake of putting customer deposit and then thinking, maybe not remembering or not using the report, that I can apply the entire 60,000. Let's put the entire 60,000 in there, negative 60,000. So thinking I can apply the whole thing, you can annul the invoice, mark it paid or whatever. But when I click on save and close and I go back into my report, now I'm going to have this balance is going to be negative. You should never have a negative customer deposit. This is why you need to check this report first, check the balance, and make sure that you only apply up to that amount. So I'm going to go back into that invoice for 60,000, and I'm only going to apply the negative 55 that I have left in there. So I can only bring this up to 0. And yes, this invoice will continue to have a $5,000 open balance. And you don't have to send this to the customer because you will confuse them. That is just going to be open for internal purposes. So let's go ahead and click on save and close. And let's say that now we get to invoice our customer the remaining amount from the payment schedule, which is the other 35,000. Notice that my liability account is at 0. So I'm going to go to new. I'm going to go to invoice. Now we're requesting money, not recognizing revenue particularly. Let's say this happened now in May. I may have messed up the dates, but I guess you can follow. We're not going to bring it from the estimate, again, because we're not recognizing revenue. We're just requesting money. We'll put here customer deposits, and the balance that they owe us was 35,000. And then we'll put in there payment schedule number 3. We click on save and send it to the customer. Hopefully they'll pay us in May. So I go back into my report, and now I have a liability of 35,000. That's how much money I've received. I have not yet applied to any invoices. Let's go back into the profit and loss again for a minute here. Let's go into a reports, profit and loss, so we can kind of follow what revenue recognition looked like. 01/01/22 through, let's say, May 31st, 22 by month. And let's go to run report. And notice that I recognized 10,000 because I did 10% of the work on 1 month, and then 60,000 in April because I did the other 60% of the work. Now we're up to 70%. The only thing we can recognize so far is 70% because that's how much work we have done, even though we got fully paid. Let's say we don't get to complete the work, let's say until June. Okay. So now I'm going to push the report to June here and click on run report. And I'm going to recognize the remaining 30% in June. And now I have to apply from those $35,000, I have to apply 5 on one and 30 on the other. So let's go to new. Let's go to invoice. Again, this is an internal invoice for revenue recognition. I'm going to select ABC customer. Let's say this is June. Okay. Well, let's do June 30th. June 30th, 2022. June 30th, 22. Yes. Let's do, in this case, we're going to bring it from the estimate because we're recognizing the revenue. So I'm going to click on add. So we're going to bring the remaining balance here, which is 30%. Okay. I could also select this top one that says remaining totals, because this is the last invoice. Then click on copy invoice. This will bring the remaining 30. It will remove that open estimate from the left-hand side, so no longer will keep reminding you to bring it. And then in here, I'm going to come in and put customer deposit and put here negative 30,000, and then click on save and close. So that invoice is paid for. Let's do 01/01/22 through June 30th, 22 by month, and click on run report. So now we are recognizing our revenue 10, 60, and 30 in those months based on when I completed the work, when I delivered the product, when I performed the service, that same concept as before. So now you're going to see that correctly being recognized. And I'm going to go back just so we can check real quick. I'm going to go back into my customers and see if any of these customers have an open balance. And effectively, ABC customer seems to have some open balances. So let's open up ABC customer, see what's going on in there. We might have sort of multiple invoices happening in there. Let's go back here for a minute to customers, and let's go to ABC customer, and let's go to not customer, transaction list. There we go, transaction list, and then let's filter these two open invoices and click on apply. And notice that I have a $35,000 open invoice, $5,000 open invoice, and $40,000 open invoice. Let's check these out. So let's go to these $35,000 open invoice. That's for the customer deposit. Okay, so those are the customer deposits that we didn't finish receiving the money for. So that's just that one's fine because that was actually a payment, and the 40 is a payment. So this we're gonna let's just complete it. Let's receive the payment, because let's say we did in fact receive that payment whenever the customer paid us, and then we'll receive the payment for the 40,000. Should have done that earlier to avoid confusion here, but again, these are independent of the revenue recognition. So we're gonna receive those payments when they happen. And the one thing I want to show you is the $5,000 open invoice. This one we cannot receive a payment for because this one was originally only $55,000 applied, because back then we only had $55,000 left in that liability account. I'm gonna go back here to liability account, click on run report, and we have $5,000 left. Remember, at some point when we looked at this, there was only $55,000 available. This is why we only applied $55,000. So we got to go back to that open invoice and adjust that so we can now sort of proactively apply that other $5,000. So I'm going to change this to negative $60,000, and then click on save and close, click on yes. Then I go back into my report, click on run, and that customer should now have a zero balance. Really important to kind of remember to go back and track those. One of the things that definitely caused confusion, it even confused me, or it at some point I couldn't tell a difference between a deposit invoice and a revenue recognition invoice. That's because I had no way of knowing. They're just all called invoices. So one of the things you could do, again, is an option, is you can take the invoices that are purely revenue recognition invoices or purely deposit invoices, and you can use a tag. So I can go into tag, and let's just create a new tag called invoice type or something like that. So I'm going to create a tag called invoice type, and let's do a new group. Let's do a new group called invoice type, actually, and then we'll call this one deposit invoice, and then click on save, and then we'll go back here into manage tags, and I'll create a new tag, and we're going to call it revenue recognition or project completion, whatever you want to call it, or invoice type, and click on save. So now I can clearly tag them depending on what they are. So we have, this is a deposit invoice for sure. Click on save and close. Let's look at the other invoice. Let's look at this one for 10,000. That was a revenue recognition invoice. So we'll click on save and close. Okay, so now we can use the tags so I can internally know, okay, was this a payment invoice or was this a revenue recognition invoice? This is a deposit for payments. And then we have, let's do the other ones here. This one for 60,000 was revenue recognition. Click on save and close. Okay, and then we got, was it the last one, the 30,000? That was revenue recognition. I think there was a $35,000 one that should be labeled as a deposit. Did I finish doing that one? No, not perfect. So deposit invoice, and then click on save and close. So then that way, when I look at the invoices, when I'm looking at them, when I'm expecting them, it's very obvious to me the type of invoice that I'm looking at. Now I can run reports for tags. So when I go into reports and I click and I type tags, I can do transaction list by tag group. And now I can see this good type group invoice type and click on run report, and then we'll do all dates. And now we can see all the transactions that are here. So we see all of our deposit invoices. We see all of our revenue recognition invoices. It's very clear how these work, and we can see them. This is how we receive the money, and this is how we got paid. Now on these ones that we got paid with, these are netting to zero, because remember, these mechanically we zero these out. So you'll know that deposit invoices will always have a positive amount, because that's an invoice that we physically send to the customer and we request to get paid. This doesn't say open balance, by the way. Let me click on the gear menu here and see if I can bring open balance. I'll bring that here into the line. Open balance is still zero. We still ended up receiving payments for all these. This says total net invoice amount. So this is how we got paid. And then this one is how we recognize revenue. Although they're zeroing out, trust me, they are in the profit and loss correctly when they're supposed to. All right, well, that's it. That's the entire saga of dealing with prepayments. And you saw both methods, the prepayment, the negative accounts receivable method. This is used a lot more for construction and longer project-based type businesses. We also combine the concept of revenue recognition as well. So I hope you enjoyed this lesson. Again, if you like this lesson or lessons like this, you want to take a look at the link I have in my description, where you can subscribe to all my advanced content. This is one of the few videos that are part of my advanced content that I'm making available in YouTube, because I want you to get a really good idea of what it's like to sit through my courses with all the detail, right? Because that's my style. I go through detail, I say examples, I show you when I made a mistake, I show you where I wasn't sure, experiment with the settings. That's my type of content. So in YouTube, typically, I do much shorter things. And if you actually got to the point that you watch up to this point, you know that my thorough videos are thorough. So my subscription to advanced content, to advanced training content, will contain stuff that looks and feels like this. Anyway, I hope you enjoyed it, and I'll see you on the next one.